I know an S Corp is going to save me a lot of money because I heard it on the internet. Well, look, a lot of you might have heard that an S Corp, if you're self employed, is the way to save you money. And maybe that's true, but maybe it's not. And I'm here to unpack it. Hi, I'm Kelly, and I teach you how to make sense of really complex tax topics by breaking it down without boring you with lots of tax jargon and code sections and all that jazz that doesn't help you. So, what about an S Corp is so appealing? Well, for a lot of small business owners, the S Corporation is a very legal tax loophole, so to speak, that allows us to kind of split the level of income that we have into an active earnings and a passive earnings mechanism. And the reason that a lot of people do that is it saves on one big thing, and that's self employment tax. If you owe self employment tax, generally speaking, this is 15.3% of your income right now. And that is really expensive because then, in addition, you're going to pay ordinary income tax, which is going to go anywhere from 10 to 37%. And it just gets really expensive. So a lot of people hear, hey, I could have an S Corp and I'm going to magically save a bunch of money. Well, maybe. It's really important to understand that although there are lots of people telling you that an S Corp is the way to save money, this should be caveated with understanding how much money you actually make and in what manner you make money. So, S Corps can be really cool for the right fit of a business owner, but they can also have a lot of pitfalls about why you might not want to do the S Corp. And I'm going to talk about a few of those because I think it's important to understand that the S Corp is not a one size fits all. And although there can be really cool tax savings opportunities, there can also be a lot of negative and a lot of really kind of bad things that happen if you get into an S Corp and it's not the right fit for you. So let's go through a few reasons why you might not want to be an S Corp. Number one, top of my list, you own real estate. If you own real estate is already a passive style investment. Because of that, you do not need to put real estate inside of an S corporation in order to create some type of additional passive income situation. It's already generally passive because that's what real estate is. Unless you're an active real estate investor, you're generally speaking, this is going to be considered passive income to you. Okay. So you don't need to put it into an S Corp to like make it passive. It's already there by being real estate. The other big reason why real estate is not good in an S Corp is we run into two big issues when we have real estate into an S Corp. One is basis, which is a big fancy word meaning you can't take losses in excess of what you've put in to the business. And this is a real problem inside of S corporations. And then the other is a disconnect on step up in basis and selling property or removing it from S corps. And we run into a whole bunch of other hairy problems when we try to get the real estate out of the S corp. And this causes a lot of problems for people. So, the big takeaway here is that if you have real estate, it is almost never the right choice to put it inside of an S corporation. And if you are a business owner who currently runs an S corporation and you're considering, say, buying the building where you're operating, you can still do so and reap the really positive tax benefits. But I would usually recommend that we put the real estate into a different type of entity. Maybe it's going to be a single member LLC. Maybe it's just going to be owned by you personally. Lots of reasons for that. But we can have the two things kind of matched together for tax purposes and be really beneficial to you without having to have the real estate owned inside the legal entity that is being taxed as an S corporation. So, number one, caution against the S corp is real estate. Number two, you don't make enough money. I know this is not something that's super popular to talk about, but a lot of people think that like the S corp fixes all problems and it's just going to magically save them money. And unfortunately, there's a lot of tax professionals in our industry that love to sell you the S corp as the fix all end all be all, but the problem is, if you don't make enough money, the S corporation is probably going to end up costing you more in filing fees than it is in what I can save you in taxes. Look, I will be the first one to tell you if the S Corp structure is going to save you how much money in taxes. But if that structure is only going to save you $1,000 in taxes, but you're going to end up paying me three to navigate the whole thing, somehow that doesn't feel like the right choice for you. And so the uncomfortable truth here is that if you're not yet making enough money, maybe the S corp isn't the right choice for you now. Okay? That doesn't mean that it won't be in the future, and we can always evaluate that. But if you're not making consistently 50 plus $1,000 net a year, I don't even think we should be talking about the S Corp, because with the S Corp comes again a lot of rules. You have to take reasonable compensation and you have extra filings and all of these things. And it's really not necessary to complicate your life yet if you're not yet making that much money. And so I don't think this conversation should start until you're at least making $50,000. And even then, we're going to have a very clear understanding of whether this is the right choice for you or whether you should just wait until you're earning more money. And so there's always a balance here, and doesn't mean you can't move there eventually, but it probably means that maybe you're just not yet there. And then number 3 reason you should consider not being an S corporation is if you have multiple partners. So S corporations have specific rules about who can own it. And with an S corporation, we can't disconnect the amount of distributions and earnings outside of the ownership percentage of the essential stock or interest of the S corporation. And this can be a problem when I have non-related partners who own a business. So I see this unfortunately too much. And so let's say I have 2 friends who got into business together, and one is like going to be wants to be passive and just kind of invest the money, and the other is going to be the one who's out there hustling and running it, and they're 25-75, okay, in their ownership for whatever reason. Well, once the thing starts making money and making distributions, if you're in the S corporation, those distributions have to be in equal parts to the ownership that you have in the S corporation. This can be a little bit sticky, particularly when you have one who's not doing as much work as the other, and it leads to a lot of problems. And again, you can't have unequal distributions here. You could change wages, but then the other person who's supposed to be passive should be taking they should be taking a wage, but they don't want to because they want to be passive. You run into all these kind of random problems. Generally speaking, LLCs or partnerships are going to be a better choice here because we have some movement and flexibility for how to get to the right answer to make everybody happy and fitting in the best tax box. So if you have outside partners or multiple partners who are not related, and even if you have a husband and wife, taxpayer spouse situation, that's not always just an instant like, oh, the S Corp's fine. We really should understand if there's more than one person owning the entity, whether or not the S corporation is the right choice, because there's just a lot of different rules that happen, and it restricts a lot of movement that I find a lot of small business entrepreneurs like to do, but they can't inside the S corp. So realize the S is sort of this like strict, stringent thing that you got to follow a bunch more rules. And we have a lot more flexibility if we stay in LLC or partnership structures. So those are my kind of big 3 reasons why you might not want to be an S Corp. I'll do a follow-up video on why you might want to be an S Corp, but realize just because somebody says the S Corp is the right choice or it's what they did, it doesn't necessarily mean it's what's right for you. And that's what's most important.